Hey everyone, Matt Sauer, founder and owner of Different Mortgage, back here with you. If you're currently looking for a mortgage, or perhaps you're just in the education phase and you're confused by all the numbers, the fees, and everything that goes into the question, what's your interest rates, or what are the mortgage lender fees, or how do I know I'm getting the best interest rates, I'm going to make what can seem very confusing easier for you to understand. First of all, don't make the mistake of asking mortgage lenders or banks just to quote you their 30-year fixed rates, because 3 quotes from 3 different banks won't always be what they appear, which I'll explain more as we go. Instead, you want to choose the right mortgage professional, because the right person will educate you, give you the real picture, the whole picture of what's best for you. After that, you can start looking at comparisons. Now, a good starting place is, rather than looking at the face value of the interest rate, you need to look at what's called the APR, which stands for the annual percentage rate. The APR is a better way to understand what you're really paying for when it comes to looking at your mortgage quote, because APR calculations take into consideration all of the fees associated with the loan in addition to the interest rate, which makes finding the best mortgage seem much easier. The lower the APR, the better the deal, right? Well, yes and no. Let me explain. You can't always trust the APR alone for an accurate understanding of its true cost, and here's why. There's no standard laws for which fees have to be included in APR, essentially allowing lenders to choose what goes into the calculation and what doesn't. Not to mention, the calculation itself is based on a number of assumptions that often don't hold true. You have to know how lenders are positioning their fees to avoid excessive charges on your closing costs. Lenders may include some fees as part of the APR, while others are kept separate. And third-party fees like title and appraisal fees are almost always left out. What's most important for you to know is closing costs vary from lender to lender. Some bait consumers with a lower rate but have higher fees, while others do the opposite. So while the APR is a good starting point for narrowing down offers, you have to dig a little deeper and really understand the true cost of any loan before committing. Now, up until October 2nd of 2015, we would look at what was called the good faith estimate, but this has just been replaced with what is called the loan estimate. This is supposed to help consumers understand the rate and the closing costs they're receiving more easily. The loan estimate will have a list of all the fees that would be charged to provide you a home loan, including charges that would otherwise be not included in the APR. Remember, lenders are required to provide you this information to you, so make sure you do get it. Now, while only an estimate, the loan estimate will give you a view of all the fees item by item and identify any instances of overcharging or hefty fees. The average consumer has limited understanding of the total cost of a mortgage, and for most people, this is the biggest purchase you'll ever make. So it's worth the time to make sure you understand this and work with someone that really knows this business and is upfront and honest with their approach. Also, if you're getting ready to buy a home, don't wait until starting to look to get pre-qualified. You want to have this figured out ahead of time and work with someone that will help you understand the numbers, so when you're ready to buy, you'll be within your budget. Now, if you need anything further, let me or my staff know. We'd be happy to be of assistance to you. Please don't hesitate to call. Our number is below. Thank you guys for watching. Hope this video has blessed you. Have a great day, and God bless.